Hi, my name's Emily, and my group and I did budgeting for a single product.
Emily will be answering questions 1 through 3 starting on page 544. Question 1. Describe your product. What is your cost of this product? What size will you purchase? At what price will you sell your repackaged product? Make projections of your sales in units in each of the upcoming 3 months. Number 2. Estimate how many hours you will spend in each of the upcoming 3 months doing the purchasing, repackaging, and selling. Select a reasonable wage rate for yourself. What will your total labor costs be in each of the upcoming 3 months?
Okay. The product we chose was Hanes men's ankle socks. We bought in bulk from Walmart for $10 a pair for $10, and we sold it at the flea market every weekend in Chico for $3 a pair. We sold it during the second quarter. Our sales budget is as follows. For the month of April, we sold 1,920 pairs of socks for $3 a pair, giving us a total sales revenue of $5,760. For the month of May, we sold 2,000 pairs of socks for $3 a pair, which gave us a revenue of $6,000. And for June, we sold 2,200 pairs of socks at $3, which gave us a revenue of $6,600. All our sales were in cash, and it added up for quarter 2 as a total of 6,120 pairs of socks, giving us a total sales revenue of $18,360. And now Diana will talk about the direct materials budget. Number 4, prepare the direct materials budget for the upcoming 3 months, assuming that you need to keep 10% of the direct materials needed for the next month's sales on hand at the end of each month. Number 5, prepare a direct labor budget for each of the upcoming 3 months. And number 6, think about any other expenses you are likely to have. Prepare the operating expenses budget for each of the upcoming 3 months.
Okay, so I started here with our direct materials budget. You begin by looking at how many units you're going to be producing. For April, we got that 1920, for May, 2,000, and June, 2,200. Now you take that and multiply it by the quantity of direct materials needed per unit. We will be packaging our socks in ribbon, so we will be required 6 inches of ribbon per unit. We multiply each sales unit by 6 to get the quantity needed for production. 11,520 in April, 12,000 in May, 13,200 for June. Then we add in our desired ending inventory. It does require that we keep 10% of the next month's inventory on hand. So here we have 1,200 from 10% of this to give us 12,720. We then subtract out our ending inventory, 10% of what we have here, so 1152. That gives us the quantity to purchase, which for April we have 11,568. We multiply that by the cost of ribbon, 25 cents for every 6 inches. So 25 cents times that gives us a total of 2,892. We follow that formula for each month. May, we have a desired ending inventory of 1,320, which is 10% of June. We then add that in to get 13,320, and we subtract out the beginning inventory, 1,200, and it gives us 12,120. We then multiply that again by 25 cents for 6 inches to get our total cost, which is 3,030. For June, we had 13,200 needed. We then add in our desired ending inventory of 1,386 to get total quantity needed, 14,586. We subtract out again beginning inventory of 1,320 to leave 13,266. We then multiply that by 25 cents to get our total cost, 3,316.50 cents. For the direct labor budget, we take again the unit sales, 1920, 2,000, 2,200, and we multiply that by the direct labor hours per unit. We calculated that would be 4 cents per unit. So 1920 times 4 gives us total hours required, which is 73, and we'll be paying ourselves $9 an hour, so we multiply the 73 times 9 to get our total cost of $656.64. For May, we do 2,000 times 4 cents to get 80. Multiply that by 9, we get 720. And in June, we had 2,200 times 4 cents to get 88, times 9 to get 792. So direct labor for the quarter will be 2,168 with 64 cents. Last is the operating expense budget. Working at a flea market, we will be required to pay booth rental each month of $40, transportation each month getting to the flea market $20, and poster and decorating costs of $25. Each month we have a total of $85, and that follows us each month to give us a total of $255. Next we'll have Jordan discussing the budgeted income statement. Okay, number 7. Prepare a budgeted income statement that reflects the budget you prepared, including the sales budget, direct materials budget, direct labor budget, and the operating expense budget. This budgeted income statement should include one column for each of the 3 months in the quarter, and it should also include a total column that represents the totals of the 3 months. What is your projected profit by month and for the quarter?
For the last part of our project is the budgeted income statement, and to get the budgeted income statement, you pretty much combine the sales budget, the direct materials, direct labor, and operating expense budget all into one to get your net income. For the first month of April, we had sales of $5,760, and you subtract out your cost of goods sold, which was $1,920, which leaves you a gross profit of $3,840. Then you subtract out your operating expenses, which for the month was $85, which leaves you with your operating income of $3,755. And then you subtract your interest expense and income tax, which we didn't have any. So the total net income for April was $3,755. Then for May, our sales increased a little bit, and we had $6,000 in sales. And you subtract out your cost of goods sold again, which was $2,000, leaving us with a gross profit of $4,000. Then you subtract out your operating expenses, which was again $85 because this is a fixed cost. Leaves you with our operating income of $3,915. Again, we didn't have any interest or income tax expense, so our net income for the month was $3,915. And then for June, our sales increased again. We had $6,600 in sales, and you subtract out the cost of goods sold, which was $2,285, leaving us with a gross profit of $4,400. Once again, subtract out the operating expense of $85, leaving us with operating income of $4,315. Again, no interest expense or income tax. And then for the total quarter we worked, we had $18,360 in sales. The cost of goods sold was $6,120, leaving us with a gross profit of $12,240. Then we subtracted out our operating expenses for the 3 months, which was $255, leaving us with an operating income of $11,985, and that was our ending net income, and that's the end of our presentation.